What's up, everybody? Welcome to Are You Down with LPT, the podcast where agents like you share their stories, experiences, and insights to help each other level up and thrive. In every episode, we're diving deep into the real-life challenges, wins, and lessons from the front lines. Whether you're a seasoned pro or just getting started, this is the place to connect, learn, and grow together. So, if you're ready to get down with LPT and take your game to the next level, let's jump in.
Well, welcome to another episode of Are You Down with LPT? You've got Jim Hibbs sitting in the hot chair today. We've got Pete Jones, extraordinary agent that he is.
Hello.
You can't wave at the microphone. You have to say hello. And our special guest, Matt Nolan, with Community Choice Credit Union, always the community's choice for a lender. How you doing, Matt?
Love it. Thank you very much for having me.
Well, we thought we'd gather real quick into the Bat Cave here to do a quick podcast because the Fed just dropped a quarter point. It was an expected quarter point. It really has nothing to do with mortgage rates, but you're going to explain to us how it's all intertwined.
Yes, I'm definitely tearing up with emotions today, and very happy that the Fed reduced rates today. I think that the Fed, it was pretty much an expected reduction. So there's a lot of public perception out there that is going to be positive towards the rates, but in all actuality, over the last 2 or 3 weeks, the 10-year T, which is where the mortgage rates are based, has kind of built in that quarter point. So I'm very pleased to say that as far as community choice goes, for a large segment of the population, we're into the fives. I've been quoting some 5.75% rates and some 5.875 rates. So we're looking pretty good in that regard. I guess the more important thing with the Fed meeting today was, even though they announced the quarter point reduction in the federal fund rate.
His phone's ringing off the hook, by the way, because the media announced this whole thing and everybody now knows. So the perception is rates are falling.
Rates are falling, exactly. And the reality is that they everyone's right, but they've been falling for about the last 2 weeks.
Yeah.
So when I look at, and I think most people had expected the quarter, but where everyone was reading the tea leaves on what's expected to come. And I think the positives you can take away from it is that some are expecting an additional 2 decreases through the rest of the year. So they'll meet again in October and they'll meet again in December. So I'm of that opinion.
Yeah. I don't even really know. I don't know why I'm here, to be honest. This is all about federal rates, and Matt Nolan's the expert. But yeah, I'm excited. The fact that they're anticipating 2 more cuts, to me as a new realtor, that's exciting, and I think it'll continue to drive eyeballs to lower rates, which is ultimately what we want to have happen.
I know. I mean, Matt has schooled me on this for years about how there's always that baked-in part of things when they have an expectation. The interest rates tend to fall because that 10-year Treasury is falling, and we've seen exactly that over the last few weeks. So, Matt, when would you expect then are we going to see a bake-in of the next bacon? I said bacon, now I'm hungry. Baked in a lowering of the rates, or continued slide because of expectations coming ahead, or will that take a little while for that to get baked into it?
I mean, the market is kind of a funny situation right now. So as soon as the announcement was made, the 10-year dropped. It was just under 4, which is the 10-year T-bill. But then shortly thereafter, now it's back over to, I think it was 4.2 last time I looked, or I'm sorry, 4.02. Sorry. But I think it's going to take a little bit of time to digest the nuances, and I'm definitely not an economist, and I try to get people the best rates we can, and try to be as informed as I can, but know that I'm not an economist and don't fully understand all the behind the scenes. But I could easily see over the course of the next 2 to 3 weeks, as the market gets more and more comfortable with where we're at now and what the projections are going to be, that we'll continue to get some more adjustments in that 10-year T. I'd really like to see it down into the mid threes. I mean, if we can get it down to whether it's 3.5, whether it's 3.75, in that range, I think I think that would put our mortgage rates in a good position for the fall.
And to clarify, you're talking about the 10-year T's being down and 3%, not mortgage rates.
Yes, thank
Yes.
you. Yes,
Well, I'm sure that's clear.
Yeah, I guess that's a good thing.
We just had a panic. People running out the door.
Yeah,
I need to get one of these now.
I do. I have talked to a number of different people, and they're really waiting to get the mortgage rates back to the 2 and 3% range. And I will tell you,
and I'm waiting to get my hair back.
they'll happen about the same time. But I mean, like I don't want to oversell anything, because I think if we were back in the 2 and 3%, and tell you the honest truth, I think in the 4s, I think it's a little bit of a pipe dream at this point in time.
Yeah.
I honestly think that a fair value or fair rate should be in the 5s is what I think.
And let's talk about that, because in my lifetime, I'll be close to 58 years on Earth. There was one time, maybe 2 times, where interest rates were in that 3, and then certainly the one time into the 2s during COVID. Am I right on that? I mean, we really
Yes.
historically, that was an anomaly. And if we get into that situation again where we have 2s or 3s, there's probably other things going on.
Yeah, and again, I mean, I think that's the big takeaway on it is that, yeah, you might have a 2% interest rate, but we could have a large situation like COVID or something else going on out there. And I could only surmise that that's the only way that we'd get back into something like that is, and it's really not healthy. I mean, we're for the last probably 2 to 3 years, we've actually paying for the sins of having rates in the 2 and 3% range. So. I don't think that's a good for the short term. I think it's fantastic, right? You be careful what you wish for, though, because it probably has something else out there.
Yeah, there is. I mean, and I'm just bringing this up because for our buyers, as we're talking to our buyers and sellers, this is a really good thing to be in the 5s. We old guys talk about and old gals talk about getting an 8% and being excited about it. So we're still in historically low rates. And being back in the 5s, it's time to get going.
Yeah, no, I definitely think so, and I think what you're gonna have, and we've talked about this a lot of different times, is that we do have people that are of my age and in the 50
young guys.
Low 50 range, that took advantage of the low interest rate. So people are sitting at 2 and 3 and 3.5% rates. And they're not really too excited about jumping off the Ferris wheel and getting into even a 6 or 7% rate. But I think you're going to see more and more houses being listed. It's a lot easier to swallow the difference between a 3.5% rate to, let's just say, 5.75. Even though it's going up, it's not going up into the 6s or 7s or even close to 8 when we were probably 3 to 6 months ago. So I think that we're going to have more inventory that hits the market, and I think that will be definitely a positive for buyers and sellers. Activity is going to help the market grow, and you're not going to be limited to 1 or 2 houses in the price range you're looking at. I think you're going to have a vast majority of houses that are going to. I won't say vast majority, but I guess you're going to have a lot of selection out there.
Yeah.
Which is interesting because Mr. Les Solgrove said on Sunday in his wonderful YouTube video that we were above 4,200 homes in the market right now, which is the highest it's been, I forget how long.
2019?
Certainly this year. I think it was 4,283 on Sunday. It's probably changed significantly since then. But to consider even more inventory coming on the market is interesting.
Yeah, and I do believe that. I mean, I think that you're going to have more coming on the market, but you're also going to have more pendings that go pending too. Mm-hmm. So
380 in the last 7 days. That's a big number for September.
Yeah, and I think that's it's just going to be activity, right? So you're going to have more houses come on, but you're also going to have more sales because again, more and more people are willing to take that jump from their 3.5% rate to, let's say, 5.75.
Yeah.
So there's going to be much more activity, I should say.
Yeah. Talk a little bit about we've got different buyers, jumbo loans. You've got FHA type buyers. Are you seeing a difference in the rate for the different, I guess, classifications of mortgage borrower?
Yeah. So like when I talk about rates, I think we're advertised at 5.75 or 5.875. That's for a conventional loan. When you talk about FHA loans are a fully backed government entity, right? So an FHA loan rates, I think I quoted one the other day at 5.5. So because it's a fully backed government loan, the FHA rates are quite a bit lower than conventional loan rates. But it gets into mortgage insurance, and I'd be happy to have those more in-depth conversations with anybody if they'd like. But yeah, FHA rates right now and VA rates, USDA rates, because all those three different products are fully backed by the government, they do have a much more aggressive interest rate.
All right. Any other questions, Pete?
I'm just excited.
I think it is exciting, I appreciate. I very much appreciate, Matt, you just sitting down into the hot seat, and I mean, this literally has happened in the last hour when we're taping this or recording this. I guess you don't tape things anymore. I showed my age again.
The 8-track.
So while I have you though, best rock song of all time, go.
We were talking about that earlier today. I mean, I think you got to go to the classics, the AC/DC, or I'd say
Shook Me All Night Long, or
Back in Black.
Back
maybe.
in Black.
Yeah,
okay,
yeah.
all right.
I go with that.
All right, Pete.
I was thinking the same damn song because I think the Hawkeye Walkout song Back in Black and for the record, those of you who can't see us, which is everybody, Matt and I are wearing the same color shirt today. Yeah. Pretty cool.
Nobody told me it was a light blue day.
Yeah.
It was a special Tuesday, Wednesday. Is it Wednesday today?
Is it Wednesday?
It's
yes,
Wednesday
it's Wednesday all day long.
It's light blue Wednesday.
Well, again, appreciate you being here, Pete. Thanks for stepping in. And Stairway to Heaven, Led Zeppelin, the greatest rock and roll song of all time. Thanks for joining us on another episode of Are You Down with LPT?
That's a wrap for today's episode of Are You Down with LPT? Thank you so much for tuning in. We hope you get some valuable takeaways to apply to your journey. New episodes drop every Friday, so make sure to subscribe so you never miss out. And hey, if you have your own story you'd like to share or questions you'd like to dive into, hit us up. Until next time, stay down with LPT and keep leveling up. Catch you in the next one.